Hi, and welcome to the Economic Depression and Preparation channel. I'm your host, Tony. Thank you for joining me on this weekend edition, briefly, for Sunday, April the 11th, 2021. Please be sure to hit that subscribe button. Preach to me for the latest 100% pure, true, unadulterated truth on financial news in America and sometimes abroad too as well. Well, I hope everyone is having a fantastic weekend and not enjoying themselves out and about. Not letting anybody or anything get on your nerves or stress you out, as this lady is doing right now with her kids. But the main news is that the Federal Reserve officials say that easy money policy will continue to stay in place until economic outcomes are achieved. Federal Reserve released minutes from its March meeting, and it said that it will continue to keep quantitative easing in place, and the policy will only be changed once outcomes are achieved and won't be adjusted based on forecasts. Now, this sounds very good because they're buying $120 billion a month in bond purchases, and they're providing substantial support to the U.S. economy, at least from the stock market's perspective and from the 1%'s perspective. So, but what happens when there's a shift in global policy? Remember that we're in a globalism economy now. We're no longer just the United States on our own. The good old days of the 1950 through the 70s is gone. And so we're in a global economy. And so what affects one country is going to affect a lot of other countries too. Now, they stated that the adherence to an outcome-based guidance is a pledge that the Fed will wait until the economy shows, quote, substantial further progress toward the dual goals of full employment and inflation that runs around 2%, both of which are higher than stated. The guidance is a shift in policy for the central bank, in which it previously said that it would adjust policy in anticipation of inflation. The minutes said that members agreed that changes in policy should be based primarily on observed outcomes rather than forecasts. The markets last week reacted little to the news, though some questioned whether the Fed needs to continue his historically accommodative policy stance. Well, we've been in this quantitative easings for 13 years now, and it hasn't really improved the quality of living for 85 to 90% of Americans. And so the stock market will continue to rise. And now we're in a situation where people are looking forward to traveling. And as we get into May, June, and July, it'll be interesting to see, because the White House pushes back on cruise industry's efforts to restart in July as Florida sues the Biden administration. Press Secretary July 4th target says that it's about small gatherings in your backyard, which is quite different than cruises where you're packed in with a bunch of people for 2 weeks on a sail. Let me know if you think about that. Are you planning on this summer, anytime between May and July, going on a cruise with your family? And this health crisis is still going on, and the vaccines are out, yes, but we don't even know if it's going to work long term, if it provides you with immunity. How is that going to affect your budget plans and your preparation plans? Are you planning on cruising to Hawaii or Mexico or the Caribbean during this time? Norwegian Cruise Lines aims to resume operations from U.S. ports starting July 4th. Carnival said this week that they're going to continue their pause through June 30th, and it may relocate ships from American ports in order to operate again. My question is this. There's no more stimulus money coming, so why would a man or woman jump on a cruise, risk their life, essentially, and getting sick, not just sick with the health bug, but they can get just general sickness. There's a lot of people on these cruises come back with norovirus and all kind of stuff. And it's just the quality of the cruise and the service has gone down because you're dealing with less workers. Remember, more than half the workers are furloughed, and the quality's gone down. And why would you spend that money when you can spend the money on preparing for your financial future? That's why I tell all my clients, I tell people, don't spend discretionary income or extra money on this type of thing. It's okay to have fun, but I would not do it in a situation like this when we're talking about cruise. That's just my opinion. Maybe, hey, if you find a good deal on one, let me know. I've never really done cruises before. But if things get worse, which I anticipate they will, remember Biden is still in the first 100 days. His first 100 days in office doesn't end until April 30th. And by then, I guarantee you we'll have some other kind of crisis coming this summer that's going to push back all these dates for all these vacationers that go to these cities and towns. It's going to be an absolute disaster when we have to lock down again, because states are doing their own thing, like Florida and Texas and other states are doing their own thing in the name of money, in the name of tourism, when we have this crisis going on. So I would look for these type of activities to really be pushed back until August or September, if people even come to take cruises and all of these things, because airline prices are going up. Cruises are saying we need to make money, but didn't they get the bailout? Didn't they get $20 billion bailed out money, just like the airlines? So I don't know why they're trying to push to reopen earlier, but it's because of money, and that's why they're doing this. And so President Biden has said that he hopes by the 4th of July, everybody can at least safely gather in small groups. He said small groups, so he doesn't say, they don't think that you should be going in these big time packed in these sardines and these cruises or any other kind of ships. But that's going to absolutely hurt the economy, because the U.S. economy is solely based on hospitality, retail, construction, and, and a little bit of financial and tech services. So it's going to be an absolute disaster, ladies and gentlemen. I just don't see how anybody's going to be able to afford that, to risk getting sick and also taking time off work, a substantial time off work, to do these 7-day cruises, 12-day cruises, or whatever may have it. And inflation is going to be going up too, and that's the problem with food, water, gas, inflation on even college education. The average price of a college education, even at a public university, has gone up, which is sad because the government has guaranteed these student loans, and so all this is going up. How are we going to even get out of this thing successfully when the Federal Reserve Bank has said that they're going to continue easy money policy through 2023, which I just don't see happening. I think next year they're going to have to tighten up the policy, especially raise these interest rates that we've seen. And this is going to put a damper on travel. So cabin fever is going to continue to set in for kids and adults likewise, because I think remote work is here to stay. Google, Facebook, Apple, Amazon, Netflix has said remote work is here for their company to stay till 2024. I know a lot of public and other sector companies, they're going to continue to do remote work, even though they're not saying it now explicitly, because they're saving money on office leases. They don't have to lease a big building downtown or in these suburbs. And so everybody's saving money. And so that's what's going to be coming up next. So get ready for higher prices on childcare, higher prices on food, water, gas, everything throughout the summer, because companies are racing to try to make up the deficit, to make up the money deficit that they may be experiencing coming up shortly here, as no more stimulus is going to be coming out, at least personal stimulus, and things are only going to be going for the infrastructure, whatever that means. So be blessed, continue to be prepared. I'll talk to you in the next video. Just want to share that with you today. Thank you.